Hello there. Welcome back to Financial Accounting Info. Today we want to look at a question paper of November 2021. So this question paper that we have. So on that question paper, we're going to look at question one, and specifically, we are going to look at question 1.2. On question 1.2, we are going to prepare this cash receipts journal, cash payments journal, and also we need to prepare the bank reconciliation statement. So this is what we have in terms of this question. So we are going to read through the questions that we have here and answer the questions that are going to follow. So these are the questions that we have in the beginning of the question. We are given the questions 1.2.1, 1.2.2, and 1.2.3. So the question reads: the information given below was extracted from the books of Kigoli Enterprise. 1.2.1, complete the cash receipt journal and cash payment journal on 3rd June 2021. Then 1.2.2, post to the general ledger account. And 1.2.3, prepare the bank a reconciliation statement on 30 June 2021. So it's very important for us to know that the cash receipts journal and cash payments journal comes as our internal documents that we have in the business. So the bank statement, on the other hand, comes as an external document that reflects what is in the cash receipt journal and cash payment journal. So at the end of the day, you'd see that what is on the credit side of the bank statement should be the same as what we are having in the cash receipts journal, and what is on the debit side of the bank statement should represent exactly what is in the cash payment journal, which also uh, 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 is the information that you are going to see in the bank account. The bank account is just representing the information that is also on the cash receipts journal and cash payment journal, whereby the debit side of the cash of the bank account is representing the cash receipts journal, and the credit side of the bank account is representing information on the cash payment journal. So remember, the journals are the books of original entry. According to that accounting cycle, that when information is taken from source documents, it's transferred to the journals. So from the journals now, we post to the ledger where we are having our bank account. So information from the cash receipts journal is a book of original entry is entered on the debit side of the bank account, and information on the cash payment journal is entered on the credit side of the bank account in our books. So this is what we have. So if there's any difference between the balance that we're having in the bank account of our ledger and the balance that we are having on the bank statement, there's need now to prepare the bank reconciliation statement, so whereby we are trying to reconcile the balance of the bank statement and the balance of the bank account. So this is what we are going to do. So we are just going to end up the information, update our journals. After updating our journals, we also go to the bank statement and reconcile and make a reconciliation. So this is what we have. So we are going to go through the question, and then we answer these questions. The question is starting there where we have in this information, and we've got a Kigoli Enterprise bank with Nedbank, and we've got a bank reconciliation statement on 30 May 2021. So this bank reconciliation is representing the bank reconciliation statement for the previous period. So we are going also going, it's also going to help us when we are now preparing the bank reconciliation for this period. So under that, we have got the cash receipts journal of Kigoli Enterprise on 30 June 2021, whereby we are given the opening balance that we're going to start with. And then we've got cash payment journal of Kigoli Enterprise also giving us opening balance there. And we've got additional information that we are given. After the additional information, the additional information are proceeding to the next page, whereby we also have 8, 9, 10, 11, and 11 marks the end of the information that we are given. So we go back there. So what we are going to do, we are going to start from the beginning of the question, where we are having the first transaction that we are having there. So what we are going to do is we are going to start with the cash receipt journal and cash payment journal. Remember, according to the question requires us to prepare the cash receipt journal and cash payment journal on the first part. So for us to prepare those journals, we need to start with the opening balances. So we're going to start with cash receipt journal and post the opening balance that we are given here. So if you come here, you'll see that the opening balance for bank is 399,150. And then debtors control, we are going to start with 26,100. And then standard accounts, we are going to start with 104,550. So we can just go there and enter those balances as our totals are brought forward at the beginning of that journal. So we go to the answer section, and obviously we enter those amounts. So what we are saying now is also the day is 30, remember? So all the details we are saying totals. These are totals brought forward. And remember the figure for bank that we had there is 399,150. And then for debtors control, the figure that we are having is 26,100. And then for sundry amounts, we have 104,550. So these are the opening balances that we have there. So we also have opening balances for the cash payments journal. So we can just check what opening balances do we have there. So these are cash payments journal, and we have got for bank, we have got here 295,680. And then also we have for creditors control, we have this one 53,670. For trading stock, we have 134,625. And then for sundry amount, we've got 59,985. So these are the figures that we are having. So we can just go there again for the cash payment journal and enter our opening balance. So we are here on our cash payments journal. We go to our cash payments journal and then we enter those amounts. This is our cash payments journal. So the opening balances, remember the day that we have there, we are having 30. And we are saying totals brought forward. And what we have for bank, remember, is 295,680. Creditors control, the figure that we are having is 53,670. And for trading stock, we have got 134,625. Then we have got for sundry amount 59,985. So these are the opening balances that we have. And then we can move on now to check on the transaction part, which journal is being affected. Then we post to the journal that is being affected. So we start with the from the beginning of the information that we are given. We are starting from additional information 1. Additional information 1 reads the bank statement showed a favorable balance of 127,476 on 30 June 2021. So very important to take note that this transaction, this balance that we are given is going to be transferred to the bank reconciliation. So this is what we have. You can skip it. Then we go to a deposit of 46,890 appeared in the cash journal of June 2021. So what does it mean? It means this deposit is there in the cash receipts journal. So what it means is it's not appearing on the bank statement. So this one also is going to be adjusted in the bank reconciliation. It's going to be adjusted in the bank institution. Remember, when a deposit is when we issue a deposit, money is going to be deposited in the bank. Immediately when the money is being issued to be deposited, it's recorded in the journals there and there. And then the bank has to record it later. So it means this deposits, we have already recorded them in the journals, but in the bank reconciliation, in the bank statement, it's not yet recorded. So we are going to adjust it in the bank reconciliation. So we also have the outstanding deposit of 19,584 appeared on the bank statement for June 2020. So this one is appearing, so it's not affecting the bank statement. On the bank statement is now there, and in the journals we had already recorded it, so it's not going to be adjusted. It's no effect in our bank reconciliation and in our journal. So we skip it again. Then we go to the next one. We've got the following debit orders appear on the bank statement. So whenever we have got a debit order, remember, it means what is being debited here is the bank statement. And we are saying what is on the debit side of the bank statement represents what is on the credit side of the bank account. So whenever the bank statement is debited, it's an outflow. So money is going out of the business. So whenever also we are having a debit order, this is usually processed at the bank and in the journals, it won't be appearing. So whenever we are having a debit order, it means we have to update it in our journals or in our cash book. So this is what we have. So it means we are going to enter this one in the cash payments journal. We've got 4,630 for water and electricity, and also we've got 7,500 for insurance. And for water and electricity, it's being paid to Polokwane City, and then this is ASPO for insurance. So this is what we have. So you can just go to the cash payments journal and summarize these transactions. Let's go to the cash payments journal. So on the cash payments journal now, we are saying we have water and electricity and insurance. So for water and electricity, remember the person the business that we are paying Polokwane City. Polokwane City is the payee. So we are going to put on the details part. We are going to say Polokwane. Polokwane City, and then the amount is 4,630. 4,630. And on the and then we check if this payment is affecting creditors control, trading stock, or sundry amount. So it's affecting creditors control, trading stock. So if it's not affecting these two, it means it's just go under the sundry column. So it means we're having our this payment. We see that it's not even affecting one of the two, that is creditors control and trading stock. So we are going to post it under sundry. We've got 12,630. And obviously we need the description there under details of sundry, of what are we paying there. We know that we are paying water and electricity. So it's water and electricity. So this is what we have there. And then obviously we go to the next one now. Remember, we've got insurance there. The insurance that was paid, we can go back there to recheck the actual details of that one. We are seeing that there's ASPO. We are paying ASPO 7,500 for insurance. So we can go and enter that one. So what we are saying is here, the pay there, we are having ASPO. So we are saying ASPO. And the amount that you are paying is 7,500. And also we check which is it affecting creditors control or trading stock. And we see that it's not affecting, so we put it under sundry. So 7,500. And also we give the description. Remember, this is insurance. So here we are saying insurance. Right. So we go back again to go to the next one. On the next one, right, on the next one, we have got item 5, saying a check of 16,800, which was received from B Govenda, was for rent. It was dishonored by the bank due to insufficient funds. So what does it mean? This check was received. Let's take notes. It was received. So it means it's under the cash receipts journal. So what happens is whenever a check is issued, whenever a check is issued there, in this sense, we are having a check that has been received. So we are receiving a check in this sense. So what it means is whenever we receive a check, we record it there and there in our journals. So it means this check was already in the cash receipts journal. It was already in the cash receipts journal recorded. And when this check really reached the bank, it was dishonored. So it means in the bank it wasn't processed, so it's not going to affect the bank reconciliation, because in the bank statement it's not there. It wasn't processed, but in the journals it was there. So we need to remove it. It was recorded under cash receipt journal as if we received, since here is saying received. Then when we want to remove it, we go to the opposite side, that is the credit side of the bank account. So it means we are going to adjust it and enter it in the cash payments journal. So this one is going to the cash payments journal, 16,800. And remember, it was for Big Govenda, and then we also adjust it under the sundry amount or sundry account section, because uh, we are saying uh, this is a check that is we are receiving from a data, and a data, we don't have any column for a data that we have there. So we can go there and enter that one and in the cash payment journal. Right, here now we are saying this is still our cash payments journal. So we are saying for details, we are saying Big Govenda. And then we are saying the amount is 16,800. And we are saying it's not affecting creditors control, because this is a check from a data. And then it's not also affecting trading stock, so it's going to be under sundry, 16,800. And then on the details part, we are saying this is for debtors control. Because it's a check that was being received from a debtor. So this is what we have, and then we can go and check what we have on the next transaction. So on the next transaction, we are having 6 deposit dated check in the bank reconciliation statement on 31 May 2021 was deposited in June 2021. Deposit dated check in the bank reconciliation statement on 31 May 2021 was deposited in June 2021. So what does it mean? It means this post-dated check uh, was then deposited. It means in the journals it was already there, but in the bank statement it was not there. But when it was deposited, it means it was processed in the bank statement. So it's now there in the journals and it's now there on the bank statement. So it's not going to affect any of the two, that is the journals and the bank statement, because it's now there both sides. So we can skip it. There's no effect. So we go to the next one. Check number 111 was lost and stopped. This check was issued to Hi-Fi Corporation for a television set. So we go to the previous bank reconciliation statement. That's where we're going to find this check number, which was lost and stopped. Check number 111. So the previous bank reconciliation statement is here. Check number 111 is here 5,889. So this check is being explained as if it was lost along the way. But remember, whenever we issue a check, we record it in the journals. When it is lost along the way, it means we have to reverse it because it's already there in the journal. As soon as it goes out of the business as issued, it's recorded. So when it's now lost, it means we have to remove it in the books now. So this is a check that was issued. So it was under the cash payments journal. It was under the cash payments journal. So to remove it, we go to the opposite side. That is, we go to the cash receipts journal to remove it. That's 5,809, 5,889. And on the description of that check, we see that it was issued to Hi-Fi Corporation. So we need to put Hi-Fi Corporation in our details section. And then I would see that this check we can it's now also going to be entered under the sundry amount section. You can go there and go to the cash receipts journal and enter it. So we are here, cash receipts journal. So now this is our cash receipts journal. So what we are saying is this check was to Wi-Fi. That's Wi-Fi Corporation. And then it was an amount of 5,889. And we are having, we are saying this check is not affecting the debtors control. So we are going to put it under sundry. We've got 5,889. And then on the description part, remember, it was a payment for equipment. Can go back to check there in terms of on the description there. It's for a television set. So a television set, there is the description that we can write there. So we are saying television set. So this is what we have in terms of this one. Then we can go and check the next one. So we are now on the next one, that is we are now on item 7 is the one that we've just posted. So we go to the next one, which is 8 now. So 8 is reading the following items appeared on the bank statement. So what does it mean? These items are on the bank statement, but they are not appearing in the journals. That is the meaning there. So we need to post them in the journal. We have got checkbook 195. So these are charges that we are having. These are bank charges. Checkbook, we have got 195. And then we have the credit card levy also 196, which is a bank charge. Service fees also is a bank charge 834. And lastly, we've got interest on favorable account. What does it mean? This is a favorable account. It means this is a favorable balance. So it means it's a credit balance on the bank statement. Because when it's a favorable balance in the bank statement, it will be on the credit side, and unfavorable will be on the debit side on the bank statement. So when remember, when the money is when we are receiving money, it's credited in the bank statement. So this interest is we are receiving it there because it's an interest on the favorable balance. We are receiving it, so it's interest received. So it's not part of this bank charges. So bank charges are here. So we can add here to get the total for bank charges. That is 195 plus 96 plus 834. And then we see what amount do we have there for these bank charges. We get 1,125 is our total there. And then this one is going to be under the cash receipts journal, since we are receiving, and it's going to be interest on current account. So this is what we have there. So we can start by going to the cash payment journal and enter this one, 1,125. This is our bank charges, cash payments journal. We are saying there for details. For details, this is our bank. Remember the name of the bank. The name of the bank. Let's just say bank here. And then we on the amount is 1,125. Is our bank charges, and it's not part of creditors, it's not part of trading stock, so we put it under sundry, which is 1,125. Then on the description part, remember we're saying these are bank charges. So we are just going to describe them as bank charges. Right, this is what we have in terms of this one. And remember, we also have interest. We also have interest that is there, interest on current account. We are now here. That is our interest on favorable balance 327. So we're going to enter it there. We are also receiving this interest from the bank. So on the details part there, we are also going to write our bank So on our details part, we are saying bank, and then the amount that we are receiving there is 327, and we are saying it's not data, so we are going to put it under something 327. Then on the description part, we are saying this is interest on current account. Uh, interest on current account. Interest on current account. So this is what we have in terms of this transaction. Then we can go again to check what's the next one we have. So we are now on 9. It reads check number 126 in favor of Ndimo Traders was for partial payment on the account. The amount of 6,990 on the bank statement was correct. Check number 126. We are saying this check number 126, the amount that we are having in the journal, the amount that we're having in the journal is incorrect. So but the amount that's on the bank statement of 6,990 is correct. So we want to see which amount we have in the journals, and it's check number 126. Check number 126. So we go and check what's the check number 126 that we have. We are having we're having it in the beginning of the question there. Check number 126. It's here 3,990. 3,990 is the wrong figure that we're having in the journal. So in the journal, it means under the cash payments journal, we are having 3,990, but the correct figure should be 6,990. So what does it mean? It means we've got a smaller figure in the cash payments journal. Because the correct figure on the bank statement is this one, 6,990. So we calculate the difference, and we are going to add the difference to 3,990 so that it reaches the 6,990. So if you say 6,990 minus 3,990 there, what amount do we have there? We are going to give 3,000 as our difference. So we are going to put 3,000 in the cash payment journal so that it reaches 6,990. So we go to the cash payment journal and end that one. And remember, on the details part, this is for Ndimo Traders. This is for Ndimo Traders. Very important. So we go there and enter that one in the cash payments journal. So we go back to the cash payment journal. We are saying details part, we are saying Ndimo Traders. We are saying Ndimo Traders. And then the amount that we have there is 3,000. And then we are going to enter that one. Remember, this is a creditor, so it's going to qualify under creditors control. And creditors control is in this section here, 3,000. And then it means this one is completed. We can go to the next one. Right. We on the next one we have item 10, a check dated 2 July. A check dated 2 July was received from a debtor in Mayek and was deposited in error. The check of 14,940 was held back for redeposit and was deposited in error. So it means, remember, whenever we have a check for deposit in the journals, we record it. There's no problem about it. But in the bank, it reflects after it is processed. So it wasn't supposed to be processed, this check, but it was processed, which means money was deposited. So what does it mean? It means the bank now had to make an adjustment in terms of a redeposit there. A check of 14,940 was held back for redeposit. So what does it mean? It means this error is affecting only the bank statement. So we are going to adjust it in the bank reconciliation. So for the journals, it's not going to affect. Then we go to the next one, which is 11. The following checks have not yet been represented for payment. So these checks have already been issued. So whenever they are issued, they are recorded in the journals. But in the bank statements, they won't be reflecting. So it means also this is affecting bank reconciliation. So this is what we have in terms of our journal. So at this point now, we can now calculate our totals for the cash receipts journal and cash payment journal. So we can start with the cash payment journal and see what total we have there. What totals do we have there? We can add there. Right. So if you add the totals there, remember we're starting from 295,680, we add 2,630, we add 10,500, we add 16,800, we add 1,125, we add 3,000. So we add there the total that we get there here. That's where we want the total. We are supposed to get 336. 336,700 and 735. 735. So this is what we have. So on the cash receipt journals, again, we are going to do the same. We are going to do the same by adding and getting the total. We add here 399,150 plus 5,889 plus 327. We get 405,366. So this is what we have. Then after that, now remember on the next part of the question, we have can go back to the question to just clarify in terms of the next assignment that we have there. We have you have to post to the general ledger account. So the general ledger account is to open the bank account. So we go to our answer section. Right, we go down. We are having our bank account there. So this is our general ledger of Symbolic Enterprise, and this is our bank account. This is our bank account. So in our bank account, obviously, we are also supposed to have our balance brought down. That is our beginning balance. So we can go back to check what balance do we have. So we are here now. The balance that we're going to start with in the bank account, we find it in the bank reconciliation of previous month. So this is the balance that we're going to start with. Debit balance according to the bank account, 68,340. So we're going to the debit side of the bank account and enter this one as our opening balance, 68,340. So we go back. So we are saying this is balance wrote down. And the amount that we are having there is 68,340. So this is the amount that we're having. And then simply we are just taking the totals that we found in the total in the payment journal and the receipts journal. So here we've got total receipts, total receipts. So on the date part, this was at the beginning, so it's 1 January. Then this one was at the end, so 1 June, here is 1 June, and here at the end, 30 June. So this is what we have. And for total receipts, the total that we got for receipts there, we can just recheck the total that we got for receipts. This is the total that we are taking. So for the receipts journal, this is the total that we have, 405,366. So this is the total that we are going to put for total receipts there. So for total receipts, we are here. So we enter that amount, 405,366. Then for here, we are having our total payments. Total payments. And then for the total payments, again, we check in the payments journal. What total did you get? We got 336,735. So this one will come on the credit side is our total payments here. So we are saying 336 here 336,735. So this is what we have. So after entering these balances, we now calculate the balance CD. And as we look at it, we see that the smaller side is the credit side. So that's where we are going to have our balance CD. And remember on the date, this was at the end, it's set January. And then we can put our double lines. Remember the bigger total is on the debit. Was already 405 is bigger than 336. So we are now adding the total of the debits that is coming in between the double line. We get 400 at 73,706. 473,706. And then for our balance sheet, we are saying 473,706 minus 336,735. Then the answer that we get is 136,971. And remember, we have our balance BT on the opposite side below the double lines. So here we've got our balance BT, which is the same amount, 136,971. And obviously, this is what we have. And then the dates balance BT will be we have the date of the first day of the next period, which is the period is ending on 3rd June, so the next day on the next period is going to be 1 July. So this is what we have in terms of the bank account. Then we can move on to the bank reconciliation part. This is our bank reconciliation. So in our bank reconciliation, what we are going to do, we are going to start with the opening balance that we're going to put there. Then that opening balance, we're obviously going to find it in the question. So we can go back to the question and see what the balance are we starting with. So I will get that balance in the additional information. We are given that bank statement showed a favorable balance of 127,476 rands. So this is going to be our opening balance. And it's a favorable, which means it's a credit balance. So we are saying credit. Remember, in the bank statement, the favorable balance will be on the credit side, so it's a credit balance. Yes, the bank statement. Yes, the bank statement, and we go to the credit side and enter that amount, which is 127,476. Go back there. Right. This is our opening balance. Then it's not going to be simple for us because we have already indicated when bank reconciliation is being affected, we are writing bank reconciliation. That's very important. We've got a deposit of 46,890, which appeared on the cash receipt journal of June 2021. So it means this deposit is not there on the bank statement. We have to enter it. So this is just an outstanding deposit. So we go there again and enter our outstanding deposit. Right. So this is what we have here. Now we are saying outstanding deposit. And we've got 46,890. Then we go again to check what next we have. What next we have there. Right. Outstanding deposit, we've entered it. We've this is also appeared on the bank statement for June 2020. This one is already entered, it's not going to affect. Right. We can check again where bank reconciliation is being affected. We are going down. Remember, we've already indicated where bank reconciliation is being affected. We are now here. That is on 10. A check dated 2 July was received from a debtor NMEC and was deposited in error. The check of 40,940 was held back for redeposit. So whenever a check is held back, a check is being held back for redeposit, it means we have to adjust it by putting it on the credit side of the bank reconciliation. So we are going to the credit side of the bank reconciliation. And then we are saying we have to say credit check, credit check to redeposit. And remember the figure that we're using there is 14,940. Right. This is what we have. And then we have another one that is affecting this bank reconciliation. We are here on the last one here is affected with 10. The following checks have not yet been presented for payment. So whenever these checks have not yet been presented, it means they are there in the journals, but in the bank statement, they are not yet processed. But we, in the reconciliation, we adjust them because they are there in the journals. Remember, the purpose of the bank reconciliation is to make sure that the balance that we're having in our ledger, that is the bank account, is the same as the balance that we're having on the bank statement. So whenever there's a difference, we prepare the bank reconciliation. So due to the fact that we are having these amounts in the journals, makes it possible now for us to include them in the reconciliation so that the balances become same. So this is what we have. So we are going to enter all these checks that has not yet been presented in the bank reconciliation. And remember, whenever we issue a check, it's an outflow, money is going out of the business. So they are supposed to be credited in the ledger bank account, but on the bank statement, they are supposed to be debited. So we are going to debit them, all of them. We've got 1, 2, 3, 4, 5. 1, 2, sorry, 1, 2, 3, 4. We have got 4 of them that we are going to enter there. Check 129, check number 145, check number 147, and check number 148. For 129, we've got 11,370, 145, 7,800, 147, 3,705, 148, 29,460. So we can just go and list them. So we are saying debit outstanding check, debit outstanding. Outstanding checks. We've got number. We've got number 129. Sorry, 129. And the amount that we're having is 11,370. And we have got a number. Next one is 145. 14. We can just maybe cross check this one. Next one is 145. Then we've got 147, then 148. Okay. So we can go back there. It's 145 and it's 7,800. And then we've got the next one, which is 147, 3,705. Then number 148. We have 29,460. So these are all the checks that we have that we are outstanding. Then we now balance. Remember, this was the last item. We now balance the bank reconciliation. So what are we going to do? We add the total of the debits and the total of the credits. So we are seeing that the greater total there, if you add the greater total there, will be on the credit side. We are going to get 189,306 on the credit side as the greater total. So it's the one that will come in between the double lines. And we also have a balance that we have to create here. That is the balance that is supposed to be there in this when we are now balancing. Since the credit side is greater, it means since the credit side is greater, it means the debit side is the smaller figure. So our balance CD will be on the debit side. And it means our bank account in the ledger is also going to have a debit balance. It's going to have a debit balance since we are having a greater side on the credit side in the bank statements. It means the opposite is true in the ledger. The bank account will be having a greater total on the debit side. So it's a debit balance in the bank account. So basically here we are saying debit balance as per bank account. Debit balance as per bank account. And we are saying here we put our double lines. And then we are saying the greater total is on the credit. We found is 189,306, which will come on both sides. Then we say this one minus 189,306 minus 29,460 minus 3,705 minus 7,800 minus 11,370. Then you get your difference there, which is 136,971. So this is the amount that we are saying should be same with the balance that we got in the bank account there to say we have reconciled correctly. So that's the purpose of the conciliation, to make sure that the balances are the same, since we are saying a bank statement comes as an external document which represents the same information that we're having in the bank account in the ledger. So we should have the same balance. If ever there's a difference, we prepare a bank reconciliation strategy, we reconcile the balances and they become the same. So this is what we have. So this is the same balance. This is the same balance that we got in the bank in the general ledger. That is the bank account. So we can go and recheck. This is the figure that we have, 136,971, and then we go and check on the bank account in the ledger. This is the figure that we got also. So it means we've reconciled correctly. Thank you for listening. Those who haven't subscribed, please subscribe and share. We are still coming with more videos that are going to help us in preparation for exams. But as for this video, I'm signing out. We'll meet again in the next video.